Huge day for Meta today, folks. The stock price is currently up by 23%. They reported their earnings yesterday, which they beat on some aspects but lost on their earnings per share. But the company's stock price is soaring today, and largely it's due to the fact that they announced $40 billion worth of stock buybacks, as well as cutting down on employees, cutting out 11,000 employees from their overall workforce. What does that mean for investors though? So with this, I'm going to load this up into the stock spec software. And if you've been following the channel for quite some time, I've been calling out Meta as a value play for quite some time. And I'm going to go deep into the numbers of this business so you have an idea of where this company stands and what you should be paying for the company today. This huge increase in stock price is really something to take a look at. In the 52-week range, folks, we hit a low of $88 and a high of $248. Pretty much a year ago, almost to the date, I was making a video of how the stock price came crumbling down from the mid 300s down to about, low 200s, and I've been buying all the way down until my cost basis is pretty much now in the 160 range. Currently, today, I'm feeling pretty nice, I gotta say. However, what does that mean for us value investors? The stock is currently ranked a 9 out of 10 on the stock spec software, which grades the company's financial statements based over the last 5 years and also on the current basis. So on average, the only thing that they're getting marked off here, folks, and so something to keep in mind, is the price to earnings ratio sitting at 23.18. Ideally, the software and myself, I like finding companies that have a price to earnings ratio of 22.5 and lower. And unfortunately, it hasn't been that over the last 5 years with Meta, but 23 is awfully damn close. And honestly, in the trailing 12 months here in the company metrics category, it's 22.23. It's there. It's there. We want to find fair multiple companies. So pretty much that is almost a wash. Now, take a look at everything else that they're doing great. They have a high current ratio, so they have enough assets to cover those liabilities. The return on equity average is high, sitting above 15%. It's currently sitting at 23 on average compared to the trailing 12 months of 18.60. Their EPS has grown over the last 5 years by huge amounts. They carry a low debt to equity. And going onto the right-hand side here, which is what I really love, their share dilution. Share dilution is down by 5% over, so 4.5% rather, over the last 5 years, and they've announced they're going to be buying back shares. This is important for you folks who are looking to get into this company, or for those who are already invested like myself, because when they're buying back shares, especially when the shares are essentially cheap, you are owning more of the profits. This is going to increase their earnings per share, which they have missed out on in this last earnings call. In regards to them missing that mark, not a huge concern to me, knowing that they're going to be buying back a lot of these shares. Their net income is up, their free cash flow is up over the last 5 years, as well as their revenue growth raising up by 24%, which is huge numbers, folks, for a company of this size, as well as the return on invested capital is sitting at a whopping 24% on average for the last 5 years, and currently it's sitting at 18.24% for the return on invested capital in the trailing 12 months. Meta is doing a lot of things right, and if you circle back to my older videos, I only have positive things to say about this business. This company's stock price has been beaten down time and time again, but now I think it's time for an upswing for this business. Now, what do I think about this stock price rising as high as it is? Honestly, I get the excitement. I understand where people are coming from. They beat the earnings. The earnings were looking good for this one quarter. Now the stock price is jumping up 20%. Ideally, I don't like jumps like that, because even though I'm now, my position is way more favorable, I want to be able to buy more of this company at a lower price. Now, do I think the stock price might come down afterwards once the hype dies down? I think so. But I don't see the euphoria lasting too long. But it's just something to consider. Now, what should we be paying for this company today? That is one thing I said we're gonna solve, and we're gonna solve it right now in the price analysis section. And if you're liking this video so far, folks, hit that like button and subscribe button. This software I'm using in front of me, if you want to get your hands on it, follow the links in the description box below. 7-day free trial. You're going to love this next part. Here's the price analysis section. I've inputted different numbers and numerics based off the historic numbers of the last from 1 to 5 to 10 years. Now, the last 1 year, they dropped down in earnings from 2021 to 2022, right? However, going forward over the next 10 years, I'm going to use some conservative revenue growth numbers based off the fact that the revenue growth has been increasing from that last quarter. Let's say that continues, and let's say I use extremely conservative numerics along with conservative profit margin and free cash flow margins based off the realm of what we've been shown here historically, with some very conservative price to earnings ratio and price to free cash flow. Desired return of 13%. Let's see what the software spits out and what we should be paying for this company today. Very important. Now, one thing I want to just, while that loads, I want to show you guys something here. So yeah, like our revenue growth has been consistently going up. The only year that they really missed was 2021 to 2022, where it dipped down from 117 billion to 116 billion, guys, and that's where the fuss came in, where you saw that stock price just collapse. Now, take a look at this, guys. Take a look at this. Current price is $188 at the time of recording this video, and the average calculation comes out to be $192.33. Pretty much fair value right now, folks. Pretty much fair value. If you purchase this stock price at this price, you can attempt to see a 13% return, given the fact that if it goes up by, let's say, 6% revenue growth over the next 10 years. Is that possible? I think it's very plausible. Now, obviously, this 1 year discrepancy might change your opinion, but I think due to the fact that the metaverse is still, it's a long-term investment, I still think that can be paid off with this business. They already hit 2 billion users. There's a lot more advertising to be done to those users. So there's a lot more revenue streams that could be coming in for this business. So currently, what do I think about Meta? It still stays the same. Right now, with this huge price increase, with these shares going up to 20%, you're pretty much getting this company at fair value. However, I would like personally for this company's stock price to go down a lot more. That way I can increase my margin of safety going forward for the long term. If you enjoyed this video, folks, hit that like button and subscribe button. Make sure you check out all my other analysis videos. New videos come out every single week. I post usually 3 to 5 videos a week, so you don't want to miss out. Thank you so much for watching. I will see you in the next one. If you enjoyed this video, make sure you don't miss out on this stock right here. Now, I believe this might be the potentially best investment going forward in 2023, given everything that's happening.